Hello everyone and welcome to Inderes TV. NYAB released its Q4 earnings report earlier today, and with me here today I have the CEO Johan Larsson. Welcome.
Thank you. Nice to be here.
Nice to have you here. So, looking at the Q4 report from the broader perspective, what are the key takeaways?
Yeah, well, it was a strong report, continuous improvements all over, I would say, but notably, of course, for the market, I would say that a 10.5 EBIT margin is a takeaway. It was in line with what we was expecting. It's not like a super performance, it's more like what we should accomplish in the fourth quarter, but it's a great performance. But overall, we're in a strong position, growth in backlog in comparison with the comparison period, and of course, great revenue development as well, 117 million euros in the fourth quarter. So the takeaways is that for the fourth consecutive quarter this year, we are quite stable and deliver, I would say.
Yeah. And if we take a step back and look back at 2024 as a whole, what key company highlights stand out to you the most? And also, are there any areas where you feel that you could improve or are not fully satisfied with going into 2025?
Yeah, first of all, I'm never fully satisfied. So all areas, and we can improve in all areas. But I would say that what stands out is we have managed and been quite successful in evening out seasonality, achieving growth within the energy sector that we have addressed and focused on a lot. We have a great performance all over within infrastructure and industry as well. Quite successfully, we have been able to build a backlog with a low risk profile and delivering quite good margins. So I would say that that is the key takeaways and a big part of building a better and stronger company.
Mm-hmm. And you are closing 2024 with a strong order backlog, which naturally supports growth in the coming quarters. But what are your overall assessment on the current demand situation as a whole in your core markets in Sweden and Finland?
Yeah, the demand situation is good. There are like three structural trends. Earlier we used to call them mega trends, but nevertheless, you have globalization, the green transition, and urbanization. And all those three areas acquires investments. And the society must invest within these areas to develop. And we address those markets. So the demand situation and the underlying demand within our segments and the markets we address are high and good. Then you have, of course, Finland, who has a more volatile economy with a bit slowness. And I would say that it won't get worse in Finland. We are at the bottom. We see some early signs of it improving. And gladly, I can see that Finnish staff is really contributing to the group's good growth overall. They play vital parts in some of our Swedish projects in the Swedish market. Some are also physically in Sweden and work here and so on. So we've been handling it quite good. But you could ask for more on the demand situation on the Finnish side. I mean, we don't need that much. Our volumes are below 100 million euros annually in Finland. So we are not that market dependent. But still, of course, we would wish that there were better times in Finland as well when it comes to the market side. But I'm pleased with our performance there, and it looks good overall.
All right. I thought we could shift to the recent acquisition. So during the first quarter of 2025, you finalized the deal with Dovre regarding their Norwegian consulting business and their international project management division. Could you just elaborate on the reason behind this acquisition and what synergies you aim to execute in coming quarters and years?
Yeah. First of all, they address the same markets as we do, or the same segments, meaning infrastructure, industry, and energy. They have a different offer than we have to their clients. They provide different services. But with our background and our industrial knowledge, where we always have performed quite well and did some quite, I would say, even to me, impressive margin improvements and so on. So I would say that this is a platform investment. We know the industry, we understand it deeply. There are a lot of synergies between the Swedish, Finnish and Norwegian business, especially between the Swedish and Norwegian for logical reasons. And the more global part, which is project personnel business, there it's more about more modest margin improvements on existing business. We won't be a contractor or deliver a scope of complicated services and so on in the Middle East and in Canada and in US and so on, where we are present. There we will do what we do and improve our margins more slightly. So that's the big view on it.
And you said that the acquired businesses are offering different services. Does that mean that you move up in the value chain, or how do you see it?
Yeah, it both deeper the value chain, and of course all of these resources more or less are movable, and we know that there is a shortage of engineers all over in the Nordics especially, and it offers a lot of opportunities going forward. You will see more during this year already.
How do you view the profitability pressure that comes with the integration of the lower margin project personnel business? Do you have any strategies in place to steer the company back toward the EBIT target of over 7.5%? And also, when do you expect to reach this goal?
Yeah, I would say that we of course have our public forecast, which is what we really can say. But in pro forma terms for 2024, before synergies and so on, we have a pro forma margin of 6.1% together. And naturally, we are aiming to improve that as quick as possible. But I would say that we won't change our long-term financial goal. We are looking at margin improvements, everything from lower hanging fruits to more complicated new offerings, new markets and so on. But it's a work in progress, and the margins should improve already this first year. And over time, I'm quite convinced that we won't see that entity as diluting the group margin. Right. I would stretch that far, actually.
All right. Would you say that this acquisition has in some way influenced your overall strategy as a business, or can we expect that the strategy to remain fairly the same going forward?
Yeah, the strategy is fairly the same, and this acquisition is in line with our strategy. So that's it's as simple as that. So the strategy remains the same. It's about being selective and growing without increasing our risk. Be very careful about our very scalable business model that allows margins that are significantly higher than what you view as our peers. I don't really view us as the same peers as the market does, but yeah, it's the same, I would say.
All right. And lastly, what do you think investors should keep an eye on in the coming quarters when it comes to NYAB?
Well, I would say that that's hard to say, of course, because everybody has a different view on how much trust they have and how much risk they view and so on. But NYAB has been on this journey for more than a decade with high growth, high profitable growth with great margins. And I would say that look out for new contracts won, because I am very, very calm and at ease with us delivering margins on our contracts. So that's the first sign, I would say, that the company is improving. We are selective in choosing contracts. We address market that is in the size of 600 billion only in Sweden and Finland annually, 600 billion SEK then, unfortunately, not euros. But we know what we are doing, and we are steadily moving in the right direction.
All right. Thank you so much, Johan, for joining me here today.
Thank you.
And thank you all for watching.